Coming up today, stocks snapped their 3-day winning streak, closing lower. Is the US-China trade deal done? What to know about the latest inflation report? The latest thoughts from Tudor Jones? The US evacuates staff from the Middle East? Tesla delays robo-taxi? And how to invest in one of the most disruptive companies in the world, headed up by billionaire Palmer Luckey. You're going to enjoy this one, guys. Let's go. Well, it was a little bit of a bearish day on Wall Street. A few mega cap tech names a little soft there today, but overall bit of checkered breadth across the board, with energy shares doing well. On the back of crude oil up over 4%, I'll show you what's going on over there, along with a few other interesting things, and stick with me because I'll show you how investors can now access the #1 company on the CNBC Disruptive 50 list through public markets. In fact, I'm already invested in it, and they could very well be coming to market through an IPO sometime in the near future, as the market for new equities is heating up. But first, just looking at the market, S&P 500 did stall out a little bit there today, just finished a touch lower, and we did just print the second reversal signal on the SPY here. For those of you who don't know, this is one of my most accurate custom indicators I've developed on the TradingView charting platform. And for anybody interested in learning more about them, check out the links below this video, along with what other tools that I use every day to find trades and share with my members. But it's interesting because we did get good news today. CPI inflation actually came in a touch lower than expected. Looks like tariffs are not giving us that bump up in inflation after all, or at least not for now. We also got news of the US and China apparently agreeing in principle to a framework on a trade deal, along with Scott Bessent saying that pauses on tariffs are likely to be extended. However, the market pulled back a little bit today on that good news, potentially suggesting buyer fatigue or maybe a sell the news type event, as the market didn't seem to have a big bullish reaction to lower than expected inflation and good progress on trade deals. But we only saw a little bump up in the VIX today, briefly getting above 18 before turning back in the afternoon. We did get a bigger move in the VVIX index, and that's the implied volatility of VIX index options, which we trade here at Click Capital as well. And quite often you can see the VVIX index move for the VIX and the market itself. But what really got moving today was crude oil, up 5.5%, almost back to $70 a barrel. Just a bit over a month ago, we're down in the mid-50s, as we've got some tensions building between the US and Iran, which I'll share with you later as well. And so could this be a little bit of a turning point in the market, even if it is just a shallow pullback, and what's otherwise been a very low realized volatility grinding type move we've had over the last month? We'll take a look at that and a lot more in today's video. But first, just a curation of some of the top headlines, data and charts we're getting from today. Morgan Stanley, Mike Wilson, who was famously bearish on the stock market for a couple of years, has now turned quite bullish, pointing to upward revisions in earnings by analysts, thinking that's going to give further tailwind to stock prices going out the rest of the year. Not so bullish on the US economy and global economic growth overall is the World Bank. They think this trade war could see global economic growth slow down to the lowest since the 1960s. And it's interesting because year to date, American stocks are not even in the top half of country ETF performance. Actually out in front is Poland and Greece, along with a few other smaller Euro economies. And we actually have to scroll down. The States is 6th last, basically still flat on the year. And so I still think there's good potential for a catch-up trade on American stocks versus European stocks. And the spread between the two does seem to be basing out somewhat here, actually building a massive bullish divergence on my DSI indicator. But what should have got markets really excited today was the latest news on a US-China trade deal, which has actually come about quite quickly, surprising a few of us, myself included. Earlier this morning, the US president posted on his own social media network, "Our deal with China is done, subject to final approval with President Xi and me. Any necessary rare earths will be supplied by China. In return, Chinese students can keep using US colleges and universities." And apparently the final tariff levels are going to be 55% on Chinese goods, with them only slapping 10% on American goods, which I'd say is a pretty good outcome, and will still incentivize companies to divest from China and move their supply chains elsewhere. We've already heard the likes of Home Depot come up with a new supply chain strategy that they're not going to get more than 10% of their foreign imports from any one country as a diversification measure. And this was confirmed by China, saying they did reach consensus in principle to a framework for implementing what was discussed in Geneva. But like I said, that on top of news from Treasury Secretary Scott Bessent that the pause on tariffs is highly likely to be extended, should have got the stock market excited, or maybe it's already fully priced that in. Saw this coming, and it's no longer so sensitive to tariff-related headlines. In other words, the market may be looking for its next catalyst or dominant factor to key off. Same deal with inflation. Even though we saw a bump up in trueflation, that didn't show up in the headline reported numbers of CPI, with core actually coming in at 2.8, a little bit lower than expected, and monthly at 0.1 instead of 0.2, showing that inflation is still structurally deaccelerating, as it has done for several years now. And that no doubt stirred up the president, also coming out today saying the Fed should lower 1 full point, would pay much less interest on debt coming due. So important. The vice president joining in as well, criticizing the Fed, accusing them of committing monetary malpractice, as Jay Powell's language of late has been more of a wait and see, along with expressing worries that tariffs will increase inflation, which is yet to show up. And that little bit better than expected CPI inflation report did likely cause US government bond yields to fall somewhat today, with the 2-year back on a 3 handle and the 10-year pulling back somewhat as well. Fed fund futures were pretty much unchanged from yesterday, still pricing in about a 70% chance the Fed will cut in September, which if we keep getting low CPI prints, they should be able to cut rates by then. And we still do have risks in the labor market. A lot of consumers are still struggling with the cost of living. All that structural embedded inflation we've had over the last 5 years has got many consumers maxing out their credit cards, tapping their pension funds, and this is something we're seeing across most Western countries as well. And we just heard Citi come out today and said they're setting aside more money for losses on loans and credit cards, in a sharp contrast to analyst expectations of a decline in provisions. So the Fed cutting rates would help millions of consumers out there, some who are drowning in debt, allow them to refi. And just hearing from a hedge fund manager I respect the most, Tudor Jones, and his latest points today, he thinks the president will tap an uber dovish Federal Reserve chair to advance his pro-growth agenda when Jay Powell's terms up next year. So I guess that's something good for the market to look forward to. We're likely to get really loose financial conditions because the president will only choose someone who agrees with him that interest rates should be lower. And that'll help the White House achieve their agenda of a weaker US dollar, which Tudor Jones also thinks could fall 10% over the next year. And there's rumor going around it could actually be Scott Bessent as the new Fed chair. Also mentioning that the $4 trillion tax bill will require Fed cuts. Also saying the deficit's unsustainable, recommending complementary austerity measures. Also endorsed the idea of Trump accounts, a one-time $4 billion program for low-cost index investments for newborns, helping to foster long-term wealth creation and broaden participation in capital markets, but also coming out with some bearish points like if the Fed is unwilling to deliver rate cuts or fiscal discipline is not restored, there's risk of increased volatility and higher inflation, and he's advising investors to hedge against inflationary pressures with a mix of stocks, gold, and volatility-adjusted Bitcoin. Also helping Treasury yields pull back today was strong demand for 10-year US Treasury notes after a $39 billion auction today, showing that there's still good appetite for US Treasuries from big investors around the world, which should help stocks as well, especially if the 10-year can stay under 5%. But maybe what got the stock market a little worried today was rising tensions in the Middle East, helping to send crude oil up over 5% actually, with the US president expressing doubt that the US and Iran will reach a nuclear deal, something that's being worked on currently. And likely alarming investors was the US preparing a partial evacuation of its embassy in Iraq due to heightened security risks in the region. This is something they did back in Ukraine, just prior to the Russian invasion in 2022. So I guess there's still tail risk here of a military event happening in Iran, which will no doubt spook markets. And this has got crude moving sharply higher, seemingly out of nowhere, still ticking up a little bit as I speak. And that's helping energy shares here today, one of the best performing sectors. XLE up about 1.5%. Doesn't seem to be a big reaction in gold futures though, just a slight uptick today. Still not that far from all-time highs either. The uptrend appears to be still intact, and silver also just taking a pause at 15-year highs. And with the rise of gold over the last 6 months, it's actually surpassed the euro as the second largest global reserve asset, with central banks globally increasing their gold holdings by over 1,000 tons for the 3rd year in a row. And a big part of this is the pursuit of de-dollarization, a move away from US dollar reserves. But they are still overall very dominant, with global central bank reserves holding more than double their value in gold and US dollars. And it's actually a bit of a return to how the world worked for many, many years. Gold was considered real money, and fiat currency, paper money, was considered an IOU of gold. But ever since 1971, fiat was depegged from gold and has become its own entire entity. But gold bullion is making a comeback, now getting back to levels last seen in the 70s of what global central banks hold. And just looking at a long-term chart of the performance of gold versus silver going back to 1960, gold's absolutely trounced it as of the current date. But what you'll notice going back in the previous large 2 bull markets we've had, silver can quite often catch up, if not overtake the performance of gold, and in short order as well. You'll often see this in commodity markets. The majority of the gains in the last 10% of the entire bull market, looking at the length of it. And so silver could be about to go into a banana zone and catch up to gold. And one way to play that is with the Silver Miners ETF, SILV. It's got exposure to 41 global silver mining companies, and that's just recently broken out to multi-year highs. And also relatively against the underlying silver as well. And that's what you'll typically see in commodity bull markets. The miners which often lag for many years behind the underlying, can catch up and quickly start outperforming the underlying. There's also other sympathy plays on the strong bull market in gold, and that's of Brazilian stocks, a commodity-rich country, still one of the best valued countries looking across the world in terms of equity valuations. And looking back on that last big commodity bull market we had in the mid-2000s, Brazilian stocks did very well. And that's part of my reason why I took a bullish position in the Brazilian stock ETF, EWZ today, one that I share with my MMK members with a unique strategy using options, allowing us to profit three ways, as they have very liquid options on this ETF as it's well traded. And just moving on to another key stock in play this week, Tesla, on the cusp of robo-taxi launch. After they've already been spotted on the streets of Austin, Texas, we've just got news that they're delaying the launch until later this month on the 22nd. But that didn't seem to upset the market too much. We actually finished pretty much flat there on the day. The market's coming off a bit after hours as I speak, but it's been a pretty quick bounce back after that big sell-off last Thursday, as it appears the spat between Elon Musk and the president is over, with Musk actually expressing regret in a post on his social media platform X, saying some of his posts last week went too far. So it looks like tensions have dialed down there. The market's obviously appreciated that, and that's got the stamp of approval from many on Wall Street, like Wedbush's Dan Ives, who, like Morgan Stanley, think it may have been a calculated move by Musk to distance Tesla from the Trump and Doge brand, as that was getting dragged through the mud and did come at a bit of a cost for Musk's reputation and Tesla shareholders for his efforts trying to clean up wasteful government spending, which Elon admitted is a lot harder than he imagined. He's not happy with moves from Congress and the latest spending bill, which, as we all saw, spilled over last week. But now it's back to business. The White House and Tesla do have to work with each other for the benefit of all. And hopefully now Tesla and Elon can become somewhat apolitical and step back from involvement in politics, as you inevitably always end up upsetting many people, regardless of your intention. But just moving on to the company I had alluded to at the start of this video, which is actually ranked number 1 on CNBC's 2025 Disruptive 50 list, which is what they think are the most disruptive companies in the world. And that is Anduril, actually coming out ahead of OpenAI with ChatGPT and a few other hot private companies that could be coming to public markets on the NASDAQ in the coming months and years, like Databricks, Anthropic, Canva Drawing Tool, and a few others like Stripe and other futuristic companies. And here's a look at the Anduril website. And so basically they're a fast-growing US defense tech company, reshaping how military systems are developed, attracting major attention, build an AI-driven defense system like drones, surveillance towers, underwater vehicles, and counter-drone tech, combining software-first innovation with hardware, focusing on rapid deployment and adaptability. So they design both the hardware and software, allowing full system integration. And they're kind of seen as the next generation of Palantir meets SpaceX for defense. And that's founded by a really interesting character who goes by the name of Palmer Luckey. Just sounds like money to me straight away. Very smart guy. He actually founded Oculus VR in 2012, sold it to Facebook in 2014 for $2 billion in cash and stock, and he's still only 32 years old. So clearly a visionary, and this plays right into political tailwinds. We actually saw today the president signing an executive order on drones, flying cars, and supersonics. America looking to lead on this very important industry as well. The future of combat is drones. Very cheap and effective. We saw what Ukraine just did in Russia with drones, taking out 40 military aircraft, significantly reducing Russia's ability to fire off devastating bombs. So the White House is looking to significantly deregulate and speed up political support of these key industries going forward. And that's been especially highlighted by China blocking the export of critical minerals used in these industries. The analysts are warning Western defense giants are vulnerable. And so Anduril, just like Palantir, been really kind of US homegrown, unreliant on China, and with domestic production, they're going to be closely aligned with the US government for many years. No doubt it's got investors excited. But unless you're a $1 billion venture capital fund, you can't get access to this up-and-coming company. Until a few days ago, ETF I've held a position in since earlier this year. I've actually shared with you guys the Entrepreneur Shares public-private crossover ETF. Actually just took a small position in Anduril as part of their latest financing round and likely move towards IPO, I think, in this current president's term. And so this ETF goes under the ticker XOVR, focusing on investing in a concentrated portfolio of companies based on their entrepreneur factor, often founder-led, and some of the most innovative companies in the world. Their largest holdings actually in the still private SpaceX, and others up there, Nvidia, Meta, Alphabet, Oracle, Netflix, and a lot of digital platforms, which I think are some of the most high quality businesses in the world. And they've also got two other holdings in private company, Klarna, which is a popular up and coming buy now, pay later network, and the latest, Anduril, real hot defense tech. And that too's made a really good recovery since the lows of early April and continues to be one of my core holdings in my long-term portfolio. So I was pleased to see news of that a few days ago as well. And we are getting signs the IPO market is heating up. Chime, a digital bank, getting set to come onto the market this week. And another top stock on the CNBC Disruptive 50 list, Databricks, another AI intelligence platform, could also be lining up an IPO soon. And we just heard from NVIDIA CEO Jensen Huang in Paris, who only late last year cast doubt on all the buzz around quantum computing, now says it's reaching an inflection point, and we are within reach of being able to apply quantum computers in areas that can solve some interesting problems in the coming. And that actually lit up a few quantum stocks here today. QUBT up 25%, and a bit of a bounce back in a few others like Rigetti as well. Along with the hot nuclear trade, the companies that are going to power AI going forward, like Oklo up 29% today, and NewScale as well, breaking out on big volume. Still plenty of momentum here. And just looking at NVIDIA approaching key resistance, all-time highs, stalling out a little bit here with the market. If we were going to make a pullback, I'd say it could happen this week, as we are getting a few reversal signals on the key indices. There's the Russell 2000, Dow Jones Industrial, the Nasdaq 100, and of course the S&P 500. As we can see, volatility has been quiet for about a month and a half now. But with that move up in crude and the VVIX, the market may be testing this bull run of late. We don't have much in the way of economic data for the rest of the week, just PPI, consumer sentiment on Friday, and the VIX is pricing in another low range day for tomorrow. As usual, we'll see what we get tomorrow, and I look forward to breaking it all down for you again right here on the Click Capital channel. Thanks for watching, and I'll see you again this time tomorrow. Cheers.